Datavault AI Inc., trading under ticker symbol DVLT on the NASDAQ, is currently changing hands right now at 39.32 cents per share during intraday trading on Tuesday, July 21, 2026, marking a modest gain of 0.64% on the session after swinging between a daily low of 39.3 cents and an intraday peak of 40.98 cents. While retail traders skimming standard financial headlines might dismiss a micro-cap stock sitting under 40 cents as just another speculative penny equity floating around on light volume, something far more calculated is playing out behind the scenes that most retail accounts on a popular individual brokerage or mobile app are missing entirely. Just this morning, news broke that financial technology giant Fiserv signed an exclusive multi-year agreement to power embedded banking, payment infrastructure, and digital debit card issuance for Datavault AI and its upcoming athlete monetization marketplace, sending a clear signal that enterprise heavyweights are beginning to take this infrastructure seriously. When you look at social media boards or scanning tools on Robinhood stock trading, the consensus narrative on Datavault AI is that it is a high-risk penny stock recovering from extreme historical dilution and a corporate rebranding. The common expectation among retail investors who rely on casual self-investing is that a company trading under $0.50 with past net losses is merely riding the coattails of generic artificial intelligence chatter. However, the reality on the ground tells a fundamentally different story. While speculative retail accounts are busy chasing mega-cap names like Tesla stock, Apple stock, or Nvidia stock, institutional market participants and structural partners are watching how Datavault AI is quietly positioning itself as a foundational data asset tokenization bridge for major commercial enterprises. To understand why this stock is generating over 10 million shares in daily trading volume, we have to look closely at the recent tape action. Over the past 3 weeks, trading in DVLT has experienced massive accumulation spikes, including a massive 105 million share volume surge on July 1st that pushed the price up over 15% in a single session. That was followed by consistent elevated turnover averaging 10 to 25 million shares daily. In microcap equities, sustained high volume without immediate collapse usually signals institutional position building or strategic distribution rather than retail momentum chasing. Investors utilizing interactive brokers trading or checking institutional ownership logs on Fidelity Wealth Management can see that top-tier asset managers like Vanguard, State Street, and BlackRock hold millions of shares accumulated across recent quarters, reflecting an underlying institutional floor beneath the daily volatility. The immediate catalyst driving today's market chatter is the announcement that Fiserv, a massive leader in payments and processing, will serve as the exclusive embedded financial services engine for Datavault AI. Through this platform, Fiserv is directly integrating banking accounts, payment rails, and debit cards into Datavault AI's information data exchange and its name, image, and likeness marketplace. This marketplace allows high school and college athletes to securely monetize their personal brand assets while receiving direct financial settlements through embedded wallets. For a company with a market valuation hovering around $100 million, securing an exclusive partnership with a global payment infrastructure provider like Fiserv validates the underlying architecture in a way that press statements alone never could. This partnership comes on the heels of several rapid operational milestones announced over the past few weeks. Earlier this month, Datavault AI secured a license agreement and purchasing fund structure of up to $700 million with Patriot Strategic Metals to commercialize its data valuation engine. Shortly after, the company announced the tokenization of Available Infrastructure's Project Questral fleet, creating a potential $1 billion utility token ecosystem for sovereign cybersecure edge compute systems. Furthermore, the United States Patent and Trademark Office issued a notice of allowance for a proprietary patent owned by Datavault AI, designed to combat naked short selling and excessive short positioning through tokenized dividend distribution models. If you're tracking these moves inside your Fidelity mobile app or setting up custom alerts on Interactive Brokers platform, leave a comment below right now sharing how many shares of Datavault AI you currently hold in your portfolio, or whether you think microcap AI data tokens are worth the risk. Driving active discussion around these technical shifts helps everyone evaluate the risk profile more accurately. To grasp how all these pieces fit together, it helps to review how the business actually operates and where it came from. Originally incorporated as WISA Technologies in 2010, the company built its foundation on patented high-definition wireless audio transmission and acoustic science protocols. In February 2025, the organization underwent a strategic transformation and rebranded as Datavault AI Inc., pivoting into enterprise data sciences, high-performance computing, and real-world asset tokenization, while retaining its legacy acoustic intellectual property. Today, the company operates through two main divisions, the Acoustic Science Division and the Data Science Division. The Acoustic Science Division continues to license spatial and multi-channel audio technologies under brands like WISA, ADIO, and Sumerian, serving home theater and commercial audio hardware markets. Meanwhile, the Data Science Division represents the core growth engine. This side of the business utilizes cloud infrastructure and generative software agents branded as DataVault, DataValue, DataScore, and DataVault Bank. These tools allow enterprise clients across sports, real estate, energy, fintech, and biotech to measure the financial worth of their unstructured datasets, assign secure digital twin metadata, and trade or license those assets across the Information Data Exchange. Many investors managing personal accounts on SoFi Active Investing or setting up automated allocations with SoFi Robo-Advisor often overlook how enterprise data valuation functions. Most corporations sit on petabytes of customer, operational, and intellectual data that remain unmonetized on balance sheets because traditional accounting standards offer no standard framework for valuing data as a liquid asset. Datavault AI attempts to solve this problem by providing mathematical risk scoring, audit trails, and tokenized compliance rails that let companies borrow against, license, or trade data directly. Management has set an ambitious full-year 2026 revenue target between $40 and $50 million as these monetization platforms scale up. Looking ahead at future scenarios, the key catalyst for Datavault AI will be execution and conversion of headline partnerships into actual recurring top-line cash flow. If the Fiserv embedded finance integration seamlessly onboarding thousands of collegiate athletes and enterprise data traders onto the Information Data Exchange, transaction volume could generate substantial high-margin licensing fees. In that bullish scenario, the company could validate management's revenue projections, leading to potential institutional re-ratings on popular investing sites and research tools across Fidelity Brokerage or Robinhood app. Conversely, investors must remain clear-eyed about the structural risks inherent in microcap tech equities. Datavault AI carries historical net losses and an expanding share count from past capital raises, which can create overhead resistance whenever the stock rallies. Furthermore, operating at the intersection of artificial intelligence, real-world asset tokenization, and digital finance subjects the business to shifting regulatory frameworks. If adoption lags or dilution continues, the stock could remain range-bound under 50 cents despite positive press updates. Investors utilizing online investment platforms, self-investing tools, or brokerage services through Interactive Brokers, Fidelity, Robinhood, or SoFi Invest must carefully balance speculative potential against balance sheet reality. Ultimately, the divergence between market expectation and operational reality defines the current thesis on Datavault AI. While consensus belief views the stock as a low-priced, volatile equity struggling to maintain momentum above 50 cents, deeper analysis reveals a company aggressively building out high-level infrastructure alongside industry giants like Fiserv, expanding its intellectual property moat and targeting significant revenue scaling in 2026. Whether this transformation translates to sustained long-term shareholder value will depend entirely on how effectively management turns tokenized data concepts into real-world cash flow over the coming quarters.